We'll get on to a couple of these companies now from the other companies from our AIM 100 view as well. Erin, you've been looking at Kitwave, which, according to my notes here, is a wholesale business with deposits and delivery through the UK. Could you expand a little bit on that, please?
Yes, sure. So Kitwave are quite an interesting company in that they are a food wholesaler, but they're spread across kind of three quite different divisions. So they go from supplying the confectionery you find in vending machines all the way up to servicing pubs and hospitality with delivered meals. And they've been a real serial acquirer in the last kind of decade. I think since 2011, they've made about 15 bolt-on acquisitions. So that's been the way that they've grown. But the biggest one was certainly last year. They acquired Creed Catering, which really transformed their business, and it gave them much more exposure to the kind of hospitality, food service side of things. So that's been a big focus for them in recent months.
Yeah, when I was just looking at it before, it put me in mind a little bit of Compass Group, obviously a larger concern and well established now, but it's that point about food service business, even at this stage of the game, it's still pretty fragmented. So there's lots of M&A opportunities out there as well. So is there principal exposure to the UK?
Yes, they are exclusively exposed to the UK. So with that comes the kind of scenario where they are a little bit of a hostage of economic domestic cycles, unfortunately.
And I don't know if you alluded to it before, but the recent profit warning as well, what was that in relation to?
So that came largely out of more near-term concerns around kind of rising employment costs, a shakier economic backdrop due to the UK exposure. And as a result, they're trading on quite a cheap multiple. But I think the view is really that doesn't reflect the long-term prospects of the business, particularly with this transformative Creed Catering acquisition.
Well, that sort of raises the scenario that someone might come in for them at one point. It's often as I said before, it's a feature of the sector anyway. It's one that we'll be keeping an eye on in future there. And we'll move over to Next 15, which Valeria has been looking at. It's a consultancy in relation to various specialist services, including market research and data analytics. These are all highly pertinent themes given the inexorable rise of AI as well. So, Valeria, what do you make of the company and its latest reports to market?
Well, let's just say that the company has had an interesting year, to say the least. Next 15 has been around for over 30 years, and it used to be one of the AIM market's darlings. But I think you actually wrote about it last year. But they had a huge profit warning last summer. That have to do with one of the acquisitions they made in 2020. So Mac49, their venture consultancy arm, they lost their biggest client. So they had a contract running for 5 years worth $400 million, which was actually terminated 2 years early. So yeah, that sent the shares plunging and really hit sentiment. So the company has been trying to sort of recover from that. But then the news came that the management team at Next 15 said that there had been some allegations of misconduct with the founders of that business, which again just sent the shares spiraling down once again. And that actually concluded with the departure of Tom Dyson, which had been the CEO of that company for over 30 years. So the story now with Next 15 is just sort of trying to move on from that scandal. They've actually ended up closing that business. And the new CEO that came in this summer, Sam Knights, has also been trying to simplify the business. I mean, this had been something that the previous CEO had been doing, but just sort of accelerating that process. So yeah, lots going on.
Yeah. Presumably they won't be able to draw a line under Mac49 until 2027 because of a dispute over a $91 million earnout as well. Which is, I don't know if that whole sort of problem there highlights over concentration in terms of contracts, which is sometimes an issue for these sort of companies as well. So, leaving aside that specific issue itself, what do you see as a near-term challenge
Well, right
for
now
the
it's
company?
sort of similar to some of its peers. For example, S4 Capital, Next 15 has quite a lot of exposure to technology clients, which is, as we all know, they've been prioritizing the expenditure in building out sort of their AI infrastructure. So that's meant that they've been reducing their spend in marketing, and obviously that's had quite a big impact on Next 15. So it's trying to sort of grow areas like retail marketing, which has meant that consumer clients now are its biggest consumer base. But it's also, again, as the other sort of agency players, is trying to adapt to how AI is reshaping the industry. But what analysts say is that Next 15 is well placed for this because if it's been trying to move towards things like data-driven marketing, which should benefit from AI. It should make services a little bit better for clients. But obviously, it still has its more traditional creative marketing business, which is very much exposed to AI, sort of compressing margins there and making their work a lot cheaper for clients.
So I note here that the shares have retraced to a certain degree since all those problems as well. So what's
Last
the
time I
valuation
checked,
looking
it
like
was
at the moment?
around 8 times forward earnings, which is a bit of an improvement from the average of the last year, but it's still quite low. It's just a premium to MNC Saatchi, which actually Next 15 tried to buy a couple of years ago, but MNC has Next 15 has double the margins, so that shows the a bit of an undervaluation there. But yeah, the question now is with Mach 49, obviously with the earnout overhang still hanging over sentiment. But the question now is if it can show that it can return to growth, that could be a bit of a re-rating event. So yeah, we're watching for that.
Yeah, I guess with all these consultancies as well, a problem you get is that even though they tend to produce pretty large gross margins, it's that transition through to net earnings which is problematic from time to time. And I wouldn't mind Belly's been pretty much the same with Next 15. Okay, Valeria, thank you very much for that. Unfortunately, now we've run out of time, so I won't be able to expand on the potential black swan event posed by the Three-Eye Atlas comet. We'll have to wait till next week for that one. So it just leaves me to thank Erin, Hugh, and Valeria, and of course our sainted producer Maddie Apthorpe for their contributions. Thank you all for listening, and we hope that you have a happy and profitable week. Until next time, goodbye.